All right, so I'm going to go over my trades for today. Broke a 5-day losing streak by finishing up 700 on the day, $2,231 on AMAM, which was pretty good. My first entry on it was way down at 360. It's up $1 a share from that first entry. But, as always, I took profit off the table as it went up and then added back, actively trading it because you never know where it's going to top out, right? Now, I started the morning going red, which at that time made it my sixth consecutive red day. And I was thinking, boy, it's been a while since I did that. If let's see, I look at my calendar, I did it in 2020. I had 6 red days in a row between February and March. So I'm grateful to have averted uh, having another 6-day losing streak, but I'm not out of the woods. I mean, today's a small green day. I'm making the choice here to throw in the towel, perhaps early. But one of the things that I mentioned in my episode that I recorded last week about knowing when to walk away and cutting losers is that it's better to walk away early. And the reason is, especially on a day like today, where, I'm making money, but I also went red on 2 stocks. It wouldn't take much to get caught in a nasty flush. And in fact, AMAM did have a bit of a nasty flush right here. Hit a high of 455. It flushed down to 436, and I thought it was done. It then rallied back up here to a high of 459, tapped 460, dipped down to 452, and then here, sort of pulled away. But you've got to be careful on these. Overstaying your welcome can get you into trouble. We're coming up to a double top here, approximately on this daily level. We've kind of gotten through it, but we'll see whether or not it can hold over this 450 level. 455, 454 was the previous resistance. So, it's through it right now. I hope it goes higher. I hope it goes a lot higher. But for me, I've got to break the red streak. And the only way I can certainly break it is by stopping right here now that I'm green. And I went down 700 on my first trade. So let's look at the first trade of the day. MOB. All right, so MOB stock pops up. Right now it's up 49%. It was our leading gapper pre-market. And on this one, I waited for it to prove itself, and I took my first entry as it broke the top of this red candle. So I got in right up here at like 274, 275. It squeezes up to a high of 290. I take profit at 295. And it goes up to a high of 305. Then it pulls back, and I bought this dip right here at 84. And I caught what turned out to be the biggest red candle of the morning as it dropped all the way to 252. I added it 255 or so. It does come back up here to about 268, but my average was like 275 or something. And when it came back down, I was like, you know what? Just cut it. Just get out of this thing. So I went from being green on it to red and was down 700. And naturally, I was feeling frustrated. I was like, all right, well, I set a goal for today, that this would sort of be my first day of trader rehab to try to focus on good quality trades. And sometimes your first day of trader rehab, you're red. I mean, unfortunately, sometimes that happens, and that's what happened. This entry right here, at that time, it looked like it was doing a 1-minute pullback. I was trying to buy that dip, looking for the rip back up to 3. And I didn't expect a 30-cent flush. And the first entry was fine too, a break through the highs. So those were fine entries, but I just caught, misfortune on that trade. So after that, my next trade was ATLX. I sat patiently and waited for something else to pop up. Now, ATLX was one of our top gappers, and at the open, it squeezed up pretty nicely. I got in at $9. It went up to a high of $9.65, 65 cents a share. Okay, well, that's nice. The next candle, it was back down here at $8.72. I wasn't able to capture profit. It went up and came back down too quick. So I lost 800 on that one, putting me red 1,500 on the day. Right? So now at that point, I'm thinking, uh-oh, I don't know if I'm going to have a chance at recouping losses today. I mean, I'm just going further red. And that's when AMAM popped up. And what I looked at immediately was daily chart. Breaking through 375. Yeah, that's good for a daily breakout. It's above the 200. And so I jumped in that. But, I was able to make money, but I was also sort of up against the rope where I had to be a little bit careful to manage risk and not dig the hole deeper. And so often when that happens, I'll make some money on that trade, but I'm not going to crush it because I'm not in a position to take that kind of risk. And of course, up here, what sometimes you'll do, or I've done in the past, is I'm like, man, I was in this at 365, 370. It's up at 4. I'd be up so much more if I just held it. Screw it. I'm getting back in here at 498, And then next thing you know, you catch another big red candle and it flushes down to whatever it is. And you're sitting there thinking, wow, I'm the guy who went from a great entry to FOMOing in on the top. And now I'm red on the day. And now it's my officially, 6 red day. I'm not going to recover this. So, I'm definitely in a place right now where today is day 1 of trader rehab, trying to focus on good quality setups. ATLX was a little risky. Maybe it was too risky. It was moving though. It almost halted up. It was at the halt up level, but then it reversed. I thought we were going to get a halt up. MOB was the leading gapper. That was obvious. AMAM was off the Momo scanner, was a daily setup. That one's been the best one, but wasn't actually a stock that we were focusing on as a gapping stock. It was not really doing anything, and then really at the open, it just took off. So how high will it go? Well, of course, that's always a question. Your entry at 498 is going to look good if it does go to $5 or $6. But if this right here is the top and it comes all the way back down and reverses the whole move, then that entry is not going to feel so good. So you have to manage your risk. And for me, part of managing my risk right now is trying to break a 5-day losing streak by just being green. And that was my goal today, to sit down and to try to take 1 or 2 trades to get green and be done. And I had to trade a little more than I wanted to. I did not expect to go red on my first 2 trades. Well, I guess I was green on my first trade, but I didn't expect to be red as I went today. So the market is still a little soft, for sure. It's great that we got this move on AMAM. I certainly didn't have the confidence to just hold the whole thing, from 360, 370. Went up to a high of 407. That was awesome. I wish I'd held it maybe a little longer, but hey, green is good. At least I was trading, one of the big movers today. Maybe there'll be more, but it's 10 a.m. and this week is a short week. President's Day, of course, was yesterday. Kids are on school break, and so my time is probably better spent the rest of the day enjoying being a dad and being grateful that I broke a 5-day red streak. So I didn't break it by a lot, but on my calendar it will be a green day today. And see that false attempt at 5. Those are the types of things that can start to trap you by buying for the break, and then it flushes. And now you've got people, no doubt, who bought right there, $4.98, $4.99, $5 for the squeeze up, and they're red 6 cents a share. So if it breaks down to 485 or 480, all of a sudden you're going to have some of those people bailing out, and you can get that capitulation down. Now, if it breaks 5, you'll have some short covering. And it looks right now like it might want to try to, but here's what I would be concerned about: a break and a flush. So let's just watch this for a second, and you can see the level 2 here. 99, break, and then back below. Is it going to pull away over 505 and 510? That's what I would need to see. It's holding below 5. It's below the breakout. So that's a false break. And then people, again, who bought at 98, 99 are like, I got to bail. Shorts start to look to, ease in on that weakness with a stop at the high of 505. So then I would say, okay, if it breaks 505, that's the spot where I'd maybe be a buyer. And I'm not going to buy this up here, but I'm just saying. So I would say, 505, 506. If it can break over and hold over 5, then that's where it could be more interesting. Maybe you would have some short covering. But for me right now, I got to be grateful to be green. So I'm in the trenches. I'm going to be digging my way out of the hole for, a little while here. Went red about 22,000 last week. So being green by 700 today from a dollar standpoint, hey, there you go, right? See, that's what I'm glad I was avoiding. It's not significant, but um, it's psychologically important. So sometimes you have to manage the emotions in that way, and there is an opportunity cost there. When you're in a trader rehab, you're going to miss some opportunities. You'll have some stocks that might make big moves. You're not able to fully capitalize on it because you're in a position where you've got to be keeping a really tight leash on things, and that's the cost that you have to pay for the mistakes you made that previous trading session or that previous week or whatever it is. It just is the way it is. So there's no doubt about it. Trading is hard, and I'm happy to be the first one to tell you that this is a career that requires an incredible amount of discipline, self-awareness, self-reflection, and it can be very frustrating. Even as successful as I've been, it can still be very frustrating. So right now, I'm just grateful to be finishing the day in the green. I'm shutting it down. I will live to trade another day. I'll be back at it tomorrow, and I'm going to be in the trenches for a little bit until things start to, rally a little bit more. Yeah, we had a couple stocks today, but they were a little choppy, and we're still in a little bit of a slow stretch. So anyways, I'll be back at it tomorrow, and reminder as always, trading is risky. My results aren't typical, and make sure you practice in a simulator before you put real money on the line.